and use the chat feature to ask any questions. Try to stay on topic. We've got a lot to cover. Believe it or not, we have a new record, 12 pages long. That's the longest I've seen it since I've been here. So, yeah. So, with that, I will turn it over to you, Lynn.
Thank you, Allison, and thank you for who tuned in or dropped in. It's a big energy day in Bismarck today, as you know. The Empower conference is going on over at BSC. I spent some time over there this morning learning about new technologies and ideas and concepts, and that's pretty exciting. But we've got some pretty exciting numbers. We're up 3.5% oil production, with 36,000 barrels a day increase, up 2.5% on natural gas. I guess that puts us 50,000 MCF a day, 50 million cubic feet a day increase. And that's the first time in quite a while that oil has increased more than natural gas. So I looked into that a little bit, and if you look at our rig map, you'll see that we now have 10 rigs that are working either on the edge or outside the core area. So we actually have some expansion of the activity, drilling and completions outside that really gassy core area, which is bringing the gas oil ratio down some. That's a positive in the long term, but an interesting little phenomenon that we saw there, because month after month we've seen natural gas increase more than oil. If you look at the world energy balance, you see that after the hurricanes, we're going back to the trend of decreasing U.S. inventories. That's given us some price strength in the markets on the oil prices. And Justin will be talking about specific oil prices, but in particular, Bakken crude is selling pretty well. It's still not quite enough to really stimulate a major increase in drilling or completions. And you saw that in the small decrease in wells waiting on completion, only down 26. Most of that was on Fort Berthold, interestingly enough. And the inactive well count actually went up. So wells went idle and were not put back on production in August. So we saw an increase in the inactive well count of 20. Beautiful weather in August. Very, very unusual to see just a little bit of rain and no days in Williston or Minot that were too windy for fracking or for workovers. And only 2 days in Dickinson that were just marginally windy. And that's really unusual in North Dakota. So nice, warm summer breezes for the month of August. Turning to the Fort Berthold story, the reservation, up 12,000 barrels a day, up 23 on the well count to a record number of wells, still 85 wells waiting on completion. So with 13 rigs running on Fort Berthold, that's quite a bit of activity. And we really started to see that show up in the flaring numbers. Statewide, we lost some ground on gas capture. I think we fell from 88% down to, if you include the confidential wells, 86. Justin's numbers, I think, show 87% gas capture. So we lost some ground there, and you can see where it was. It was in the trust lands on Fort Berthold. A lot of completion activity and drilling activity on those trust lands. And the bottlenecks that we were talking about, the right-of-way bottlenecks, they should have been resolved in September. I think by the late September, early October numbers, we ought to see some improvement in gas capture on Fort Berthold. But August was a difficult month. One of the things that I didn't talk about in here, but I want to verbalize, is we've really seen another uptick in merger and acquisition activity. We've got 681 wells in the process of being transferred from long-term operators to new operators. So there's just over 400 wells that are moving from Whiting. No, I'm sorry, I got that wrong. They're moving from HRC to Bruin operating. Halcon or HRC has been a long-term operator in North Dakota. Bruin's brand new. And over 100 wells moving from Whiting to Rimrock. So we're going to have to adjust to some new operators and bring some new operators into the way of doing things in North Dakota. And I'll finish. I don't have a lot to talk about, and we'll take questions. I'll finish with some of the federal activity. Basically, what I can report is the Department of Interior's 0 for 4. The rule changes that the department is trying to implement on venting and flaring, to rescind that rule, on hydraulic fracturing, to rescind that rule, on sage grouse, and there's one other that I'm missing here. Let me just see if I can find it. That's venting and flaring, that's hydraulic fracturing, that's sage grouse, and scoping progress. I'll catch it later, but 4 of the rule recensions or revisions that BLM is involved in all took a step backwards in the courts, and we're continuing to work through litigation to try to get better rules in place for North Dakota oil and gas production. So with that, I guess I'll take questions.
Okay. Could you actually say the names of the companies again slowly? It kind of cut out. Some folks are having a hard time hearing you.
Yes, the transfers. So there are actually 3 very large well transfers going on. The biggest one is just over 400 wells. They're going from HRC operating, which was Halcon, to Bruin. Yeah, like the bear, the Bruins. And then the next largest one is just over 130 wells, going from a company called Petrol Harvester to a company called 31 Operating. And then just over 100 wells going from Whiting Oil and Gas, which is one of our biggest producers, to a new company called Grimrock. So 3 very large well transfers. That's going to change things in terms of gas capture and permitting and operating, and of course we're putting them all through the process of making sure that the wells are in compliance, or that there's some type of a program in place to bring the wells in compliance.
Okay.
You get them that time?
I tried to type it out. If you guys missed that and you have the chat bar, I tried to type that out so everyone could see that. The first question we have, do you still believe the state is running around 25 hydraulic fracturing crews? Because we were about 24 last month, I believe.
I think so, although I wasn't able to confirm that. I struggled with my computer program that I run to pull information down from Frac Focus and from our database, and work those together to estimate the number of frac crews, and I couldn't make it work today. So our best guess is that we're in the mid-20s, but I'll try to confirm that over the next day or so, and maybe you could get back to folks. I think that's about where we're at, but I couldn't confirm it.
Okay, fair enough.
With the well transfers that you were talking about, are there any particular factors that are driving them?
Yeah, so the question from the room was the well transfers, are there factors that are driving those? And yeah, one of probably the primary factor is companies have reevaluated their business model and decided to focus on an area where they're having greater success. So for example, Halcon, they are big into the Permian Basin and the Eagle Ford, and they've decided to cash in their Bakken resources and invest that capital in Texas. Petrol Harvester has had some really good success applying Bakken technology to the Mission Canyon or the Madison Formation. And so they've decided to get out of some of their properties, particularly in Bottineau and Renville, and focus on new drilling opportunities in Burke County. And so, again, they're shifting their capital. At one time, almost everything was profitable, and so they were generating a lot of cash flow and into a lot of things. Whiting Oil and Gas decided that operating on Fort Berthold was not a core area for them, And so they sold all of their reservation assets to Rimrock. Rimrock is going to be a pure Fort Berthold play. And so they've been in, and we've talked about that. They've been up to Newtown and talked with the tribal council and Chairman Fox, and they appear to really know what they're getting into or what they're doing. But what it really is driving it seems to be that companies in this price environment took a look at the different business units that they were investing in and picked out the ones that were more profitable and sold off the other stuff to invest that capital someplace else.
Staying with the transfers,
See, I always find something people are going to be
I
interested
know.
in talking about, but I forget to tell you, Alex.
I kind of rushed us today. Is what's a normal month of well transfers look like? I mean, there was a while, a few years ago, we were talking, 700 wells. So what's a normal month look like?
Right. So about a year and a half, 2 years ago, we were at 700 wells, and then it dropped off to where, in any given month, we might have 100 to 125 wells in the process of being transferred. So this is a big increase. We're talking a 5-fold jump in terms of well transfers. And so that's significant when you see 3 big groups of wells like that move into new operators. It means that something's happening in the whole cash flow world and in terms of how they value those investments.
Okay. Shifting to federal policy, the 0 for 4.
Yes.
Is there anything that could have been done better or differently to make these rule changes go more smoothly? Basically, they've been tied up in court without going through the rulemaking process. Anything that could have been done better or differently really is the question.
So I'm always a fan of simple solutions, and the simple solution for these rules, if folks decided that they didn't like the rules, was the Congressional Review Act. The Congress, U.S. Congress, actually threw each one of these rules out under the Congressional Review Act. The Senate did not. They all failed to get the sufficient votes in the Senate to cast the rule out. So then they went back into the realm of rewrites or rescinding or revising, and everybody litigates these major rule changes, either industry and states on one side, or environmental organizations and NGOs on the other side, but rule revisions almost always end up being litigated, and it costs a lot of money, it takes a lot of time, and it creates a great deal of uncertainty. So, for example, if you take the hydraulic fracturing rule, right now the hydraulic fracturing rule got overturned, the hydraulic fracturing rule got an injunction and overturned in the Wyoming courts. In the federal appeals court, they overturned the overturning of that rule. So they put the rule back in place and remanded it back down, and so it has an injunction, but it's going back to trial at the federal district court level, with the overturning the rule actually being overturned by the appeals court. So it's in this strange state of limbo right now, and at the same time, the Bureau of Land Management is proposing a rule to undo that rule and proposing a rule to change that rule. So one rule turned into 3, and a court case has turned into 2 or 3 court cases. And the venting and flaring rule, much the same. It was the efforts by Bureau of Land Management to suspend the rule were thrown out by a California court, and so now there's a new rule being written and proposed to eliminate the rule, and another new rule to revise the rule, and there you have it. So it becomes really complicated in the administrative rule and the court process. So the Congressional Review Act is something that really should be dusted off, maybe cleaned up and looked at by Congress. The reason I like it is that we have that in North Dakota. We have the Administrative Rules Committee. And so we're in the process of rulemaking right now. We'll be out on the road. We'll be here in Bismarck and out on the road tomorrow and the next day with our 28 proposed rule changes. And after those are rewritten and the Industrial Commission takes a look at them, they will have to go in front of a legislative committee for final approval. So.
Okay, sticking with the federal rules,
Long answer to a short.
do you think, well, it's a really, really complicated subject. Do you think North Dakota will ever accept some sort of compromise language? So basically we won't keep having to challenge these things in court? Are we still months or years away? And then lastly, is there a rule that we have more concerns with over others, fracking versus venting flaring? So,
all right.
Compromise.
Multiple questions. North Dakota is certainly open to consent agreement on this litigation, and that would involve the Department of Interior as well as the opposing parties, some of the environmental organizations, and some of the other states that are on the other side of those rules. And so that's always a possibility that a consent agreement could be reached. That would take months. Litigating them to a final conclusion could certainly take years. And so we're in this for the long haul. And then when you look at prioritization, the hydraulic fracturing rule is clearly the most onerous for North Dakota out of the ones that I talked about. The venting and flaring rule, we run into conflicts, but the conflicts are not nearly so severe. The sage-grouse management plan affects our oil fields in the southwest part of the state, but not the main part of our oil production. So hydraulic fracturing, number one concern.
And then I think the last part of that question was, oh, you answered it. Okay, moving on then. Any questions in the room? Go ahead, Amy.
I do expect that the flaring increase on Fort Berthold, we may have a second month of poor gas capture there because of the right-of-way issue that we got into, and the fact that it was mid to late September before the one pipeline, the bottleneck, was taken care of. And so we may have a second month of that, but I think that one's behind us now when I look at it as an October date. There still is a significant right-of-way issue in the northwest corner of the reservation that they're still waiting on BIA approval after 3 years of application for that one. So I know it's a little bit of a two-part answer. I think the main part of it is behind us, and we'll see better numbers in October when we see the October numbers. But I still don't think the problem is solved because we still have the second major right-of-way problem coming off of Fort Berthold. And I had the opportunity to sit down with quite a few companies in Grand Forks at the Petroleum Council's annual meeting. And many of them expressed concerns that the investment in the midstream and the gas capture may not be keeping up with their budget plans for the end of this year and next year. So we're going to be talking to some of the large third-party gas gathering and processing companies and seeing just exactly what their plans are for 2018. So we could have a rough go as we get into the summer of 2018. But I think this immediate problem is probably behind us, and as we go into the fourth quarter numbers, they'll look better. But as we get into some anticipated fairly high activity next summer, we could have problems.
Back to the well transfer questions. You mentioned that Rimrock was in reservation, or any of the other transfers concentrated in any particular geographic area?
Well, most of HRC operating or Halcon's operations straddle the reservation boundary as well. So out of the 681 wells, 500 of them are part of this gas capture problem. On top of, being new operators, they're acquiring wells that have gas capture problems. And that's going to make it more difficult for us. If you're a very large company like Whiting, you can compensate for that gas capture, being low in an area by exceeding the gas capture goals someplace else. But if you're purely on the reservation in a gas capture constrained area, like Rimrock, then you're going to have to find some new technology or really struggle with gas capture.
Okay. What accounted for the decline in wells waiting on completion and the drilled but uncompleted wells?
It was actually the increase in frac crews. I mean, we struggled along, or the industry struggled along in the low 20s, around 20 frac crews for most of the year. And then mid to late summer, actually started to get some trained crews in the field and get into the mid-20s. So I think we're at a point now where they're able to keep up or actually slightly outpace the rig count. But if rig count goes to 60 or more, we'll start to fall behind again. They're pretty much in balance, but you can see that the wells waiting on completion haven't fallen anywhere near what we anticipated.
At the beginning, you said this is the first time in a while that oil has increased more than natural gas. Are you going, like you said, a percentage increase?
Yeah, the question was the comment about oil versus natural gas increases, and yes, I was going on a percentage increase. So month after month, we've seen sometimes even a decline in oil production, a rise in natural gas production, and more often than not, we'd see a 1% or so increase in oil production, and we'd see 1.5%, 2%, 3% increase in gas production, and it's just flipped this time. 3.5% increase in oil and 2.5% in gas, and it should, if they were working in the same area, doing the same amount of work, the two should rise together. So anytime that they're out of sync, it indicates that something new is happening, and especially if they've been tracking one direction and then they flip and track the other direction, it means you should look a little deeper and see what has happened to activity. And in this particular case, my first thought was, are they drilling now in some lower gas oil ratio areas? And sure enough, the map shows there's 10 rigs have kind of moved out into further out into Williams County and McKenzie County and even down into Billings County, where the gas oil ratios are lower.
And then I was going to ask, do you know when the last time was that oil increased more than natural gas? Like how many months ago that might have been?
Yeah, the question was, do I remember the last time? And I don't, but we can get back to you with that. I'm sorry?
We'll look it up.
We'll look it up, but I don't remember that.
Okay.
I can pull up my spreadsheet and get you the answer pretty quick.
So I'm going to allow this question because you just brought it up, but I've been arguing with this reporter for a little bit. But you just talked about drilling in other areas, so I'm going to allow it because I'm nice. But this person is asking about a recent success in Burt County. Does that surprise you at all?
No, because, well, does it surprise me at all? Surprised that someone decided to take a risk, a major risk, by moving out into Burt County and trying some newer technology. Yes, at these oil prices, that's a surprise to see people do that. But it was someone who was able to acquire acreage. There was a company that was wanting to sell their acreage and spend that capital in Texas, And so they were able to acquire a position at a pretty good price, and they believed that if they drilled 3-mile laterals in Burke County, they could make economic wells, and they're darn sure right. So a bit of a surprise that somebody would step out like that at $50 oil, but not surprised that that new technology is really panning out. We've seen quite a few 3-mile laterals now, and they're performing very, very well.
Okay. Any questions in the room? We've got a couple questions that are more specific to Justin, so I'm going to hold those until Justin steps up. Any other questions? I'll throw it out there. Going once, going twice. You're welcome, Dennis.
Thanks, everyone.
Okay. Come on up, Justin. And just so you have a heads up, the impending questions are about takeaway capacity and pipeline infrastructure, in case you were wondering. Just a little tease for that. Okay.
Well, good afternoon, everyone. As you can hear, I'm struggling with my voice the last couple of days, so I'll do my best to speak up for those on the webinar and those in the room. And so we'll get started right into the production, what's happening around the region. Again, similar trends, eastern Montana, South Dakota, we're now over 1.1 million barrels per day in the system that's needing to be transported out of the region. One thing, just piggybacking on some of Lynn's comments about oil production, gas production. This is a new chart. This is something I look at every month. It helps me take a step back a little bit and understand what's going on. So if you just focus for just a second on the top portion, the green part of this bar chart, that is the monthly shift in oil production. So each month we all come together and we look at these numbers, and as you'll see in that top bar chart, very wild fluctuations month to month. And so what I like to do is step back and take a look at what's happening trend-wise, so that we don't come here, say, in a month from now, and if for some reason production's down for the month of September, we don't know that now, but we just take a step back and look at what's happening on a production trend basis, and that I would conclude is moving upwards. The last couple of years, you look at the numbers in green, we've seen a downward trend, and we've seen that overall in production. I think we've started to shift into a growth period with the number of rigs and completions that are taking place in the region. So I think this is just helpful, at least for me. Maybe it's helpful for you guys. Again, just to take a step back and say, month to month we get these reports out, but what does that mean on a bigger scale picture? And I did the same for natural gas at the bottom. But again, oil is what folks seem to be more focused on. So just a new chart. I'll try to include this just for reference each month going forward. On the transportation side of the world, taking a look at just very, very minor shifts, July to August, as far as how oil is leaving the region. Again, the only shift was really between just a small growth, 1% increase on the amount being moved by pipeline out of the region. When we look at the market shares, again, the longer-term trend is we're continuing to see those barrels shift in the current market towards the pipeline infrastructure. The rail market share has been going down for a number of reasons: market conditions, additional pipeline capacity, and it'll be interesting now coming into the winter months. After we get a little more time with Dakota Access in service, where we start to level off, if we find a new normal, or if this is going to be something that's fluctuating based on a number of different considerations. Slide 6 is just taking a look at my estimates for crude by rail out of the region. Still, again, very consistent throughout the summer months, June, July, August. Still roughly about 120,000 barrels per day is my estimate for the crude still leaving the state by rail car. And the destinations continues to shift as well. We're seeing, this is at least for July, the most recent month available, an even more significant shift towards the west coast to the PADD 5 refineries. I expect long-term, again, that to be the trend. We did see some interesting things happen in the month of September. There are a couple things going on with market conditions, some hurricane impacts in the Gulf, the Brent WTI spread widening, There was Hurricane Maria, which was impacting waterborne shipments to the East Coast, and so we did see some reports of rail unit trains leaving North Dakota headed towards the East Coast, at least towards the end of September, again, just for a number of different factors. That may have been just a small-term, temporary need that we'll likely see when the September numbers are made available. Pricing around the region, again, just an update. Strongest pricing continues east and west coast. It's been the trend now for quite some time, followed up by the Gulf and then the Midwest and Rockies. And as we sit, as of this morning when this was put together, in that Brent WTI spread that we watch for market consideration is still pretty strong, considering what we've seen over the last year or so, between $5 and $6. That has been, we've seen that grow as some of the storm impacts in the Gulf and inventories building in the Cushing marketplace. The LLS is relatively strong as well, north of $5. That light Louisiana sweet crude grade down in the Gulf Coast. Again, we're watching that as kind of a benchmark to compare Bakken barrel as it's delivered to the Gulf. So again, just some interesting things going on. Some of the storm impacts continuing to be felt in the marketplace. Imports, exports, fairly consistent. The number to keep an eye on here is kind of the net barrels, if you will, meaning that about 30,000 barrels per day net was being moved out of North Dakota into the Canadian pipeline system by truck. And the one thing, this is something I want to touch on. We do have a few months now of information now that Dakota Access has been in service. Taking a look at what's been happening with crude oil pricing at the wellhead in North Dakota. So for June, July, and August, the weighted average price, as I've looked at it, was about $5.61 below WTI. You compare that then to the 2016 weighted average, and if we consider that to be, kind of a normal price prior to Dakota Access going into service, average price at that time was $7.71 below WTI. So we've seen a $2.10 improvement comparing the summer months after Dakota Access has been in full service as compared to the 2016 weighted average. And so $2 per barrel so far. I know I've been at this event and other events on the record saying that it may take 6 months, it may take a year for some of the markets to adjust, and I still believe that. So the first 3 months, this is the situation. We'll continue to monitor this closely. I think we still may see some ups and downs as the market continues to adjust to this new service in place. And just for some quick back-of-the-envelope type calculations, a $1 price difference at North Dakota's production levels and tax rates. For the state tax revenues, that's about $6 million per month per dollar. And so with a $2 improvement, you're looking at about, let me go back here. So $1 is $3 million per month. And so about $18 million for that 3-month period, assuming the $2 improvement in oil price. So again, just to correct that, $1 was $3 million per month, and so $2 over a 3-month period, $18 million.
And you mean that's tax revenue that's coming into the state?
Correct, as compared if we would have just used the standard 2016 weighted average. That does not include any royalty impacts. It does not include the industry impacts. There's going to be additional revenue to those participants as well. I'm just looking at it strictly from a state tax revenue perspective. So just wanted to give everyone an update on that. A few months from now, again, I'll revisit with updated numbers for everyone on that front. Now switching gears to the natural gas side of the world, as Lynn noted, we did see a small increase in natural gas flaring. Where that took place from a percentage basis was on wells that were connected. I can say fairly confidently with activities that were going on in the month of September. We don't have those numbers yet, but in the month of September we did see numerous maintenance operations, either at plants, on pipeline systems. So we may see another slight increase when the September month reports come in. So again, just a heads up on that September did have fairly high level of maintenance and turnaround activities at various facilities around the state. And again, historically, we have seen over the last 2017 timeframe some creeping up on the natural gas flaring side, still within the NDIC flaring targets, but it's something that the gas gatherers, myself, we're just watching it very closely to see that systems are being put in place. Again, the one metric to watch that is the number of gas connections being implemented each month. The month of August, they were able to keep pace and actually connected more wells than new wells producing. So just a quick update on that front. And on the natural gas liquid side, I'm still missing a little bit of the reporting, so this is still old data. But when the July numbers do come out, I'm anticipating we did see a gas gas production increase into August and July, but with the slight increases in flaring, I would expect that natural gas liquids are going to stay very consistent June to July, potentially even into August. So when those numbers come out, I'll try and get them out either on my website, or if anyone wants specific hard numbers, please follow up with me. And last but not least, just a quick update. These are some charts that I put together for a presentation a couple weeks ago with overall state well performance metrics. We're continuing to see 2017 well performance keep pace with the 2016 type well performance, so still well above the average well performance that we've seen in the earlier years of the Bakken development. So this is on the oil side on slide 17. And on the gas side, again, keeping pace very closely with the 2016 numbers. We may see the 2017 numbers down slightly, and as Lynn alluded to, we did see in 2017 some of the activity move slightly outside of that northeast sweet spot with the highest gas oil ratio. So it's not really a surprise to see just a very slight decrease in the overall gas performance relative to where the activity has been taking place in the state. So with that, I'd be glad to answer any questions.
Okay, the questions that I had from the webinar, just any new significant oil and gas infrastructure being planned or completed by the end of the year?
By the end of the year, no. Right now, the industry is very focused on the long-term trends of the Bakken. You know that from just a crude oil takeaway perspective, we do have this window of time where we do have adequate pipeline capacity, but some of the forecasts longer term for the Bakken are growing with our better education of how these wells are performing, and so folks are very already taking very strong looks at what the transportation needs are going to be 5 years from now, 10 years from now, so that those planning discussions can take place.
Same with natural gas. Any major proposals to develop infrastructure for natural gas transportation, or in the region or in the upper Midwest? From
a natural gas perspective, we've seen some small increases in processing capacity, but from by and large, the biggest need still is going to be at that localized gathering level, making sure the wells are getting connected in a timely fashion, maintenance, pigging operations, compression on the regional gathering systems.
Any indication what's going on in South Dakota? Why their production is upticked a little bit?
So as far as South Dakota goes, the numbers that I'm seeing are continued. I suppose if you compare it to
earlier the year, yeah,
very slight upticks. But again, with that level of production, they currently have 0 rigs operating in South Dakota. That may be just relics of different wells being turned on, turned off, maintenance, that type of work. So.
Okay. Can you go back to your revenue? The dollar equals $3 million. Can you maybe explain what that means and what you mean by, well, a dollar means $3 million to the state? What is that? Can you simplify that a little bit? I think is what I'm asking.
Okay. So North Dakota, the tax is based upon the wellhead price for that North Dakota barrel. And so North Dakota, we've always been challenged because of our distance to market and transportation constraints out of the region. We've always experienced some level of discount. And so if you look at slide 11, I've got it back up here in the room. Historically, we've seen some very large discounts relative to the major benchmarks. Just looking at WTI, at some points in time, 20-plus barrel difference between what North Dakota producers were receiving relative to the WTI benchmark. And so the smaller that discount is, that means the higher the relative wellhead price is. And with the tax revenue based upon the wellhead price, the royalty owners' revenue based upon that wellhead price, and then the producers are all based upon that wellhead price. And so keeping track of that discount is very important just to understand the economics for the producers, the economics for the state from a revenue perspective. So again, there were a lot of questions leading up to Dakota Access of what it would mean to the state from a discount. And again, right now, the first few months, we're seeing that roughly $2 improvement compared to where we were in 2016.
Okay, hopefully,
That helped?
yeah, hopefully that cleared up for a couple of people. There was a question. Oh, go ahead, Amy. Sorry.
Right, very good question. So the question in the room was, how do we know that that was Dakota Access going into service and not some other external reasons? And that's a very valid question. The timing of it seems to coincide with Dakota Access going into commercial service. We know that they're offering direct service now to the Gulf Coast, where there's some higher priced markets. So again, just trying to put all the pieces together, and things are pointing to as a result of Dakota Access and the increase in overall pipeline capacity for the region.
Is there an expectation for the price differential? Meaning, is $6 a barrel a surprise?
I wouldn't say it's a surprise. I think many of us leading up to Dakota Access going to service, we were thinking when things settled out, maybe we see $1 or $2 improvement. So the $2 improvement, I think, is in line with what a lot of industry experts were saying. Again, I think we still need to iron some things out from a marketing perspective, and we may see that fluctuate up, down in the coming months. So we're going to continue to keep an eye on it. I'll keep everyone updated at these type of events with how things are trending.
Back to the differential. So are you just trying to say that North Dakota got $18 million more than it would have because of the lower differential?
If you compare it to the 2016 numbers, that $2 improvement would equate to roughly $18 million in additional revenue.
Okay. Do you think that improvement in the oil price will increase drilling and production? If so, how long will it take?
And so another good question. You know, we're still dealing with a discount off of WTI, and so really what still drives the market is going to be the major overall industry pricing scenarios. And so $1 or $2 significantly is a big improvement, and it does help. However, we're still fundamentally working within the current price structure, the low 50s overall for the industry.
Just want to clarify a number you said earlier. Did you say about 125,000 barrels a day is moving by rail?
Yeah, that's kind of my best estimate, right around 120,000.
Okay. Okay. Any other questions? Go ahead, Amy.
Yeah, and so the question in the room was TransCanada's Energy East project, the announcement that came on pulling that application. And so earlier this year, we had seen TransCanada put a pause on their Upland pipeline system. For those of you that remember, that was a system originating in the Williston Basin, moving north, proposed to connect to the Energy East project. And so now officially we know that has been taken off the table as a potential outlet for Bakken crude. So again, that just gets brought into the equation when other companies are looking at opportunities going forward for additional growth in the Bakken. At this time, so the question was, what does that mean from an overall transportation perspective, rail, in other words? I think it's still too early to tell. That project is still a number of years from going into service. And there's still opportunities for other projects to step in. So I think Well, too early maybe to tell exactly what that would be.
Okay, I just sent the message to the wrong person. So just to clarify, the numbers mean 6 million a month, 18 over the 3-month period since DAPL came into service, correct? Okay, so sorry about sending that to the wrong person. You're probably a little confused. Thank you, Justin. I find it ironic that the month you don't have a voice, you are getting peppered with questions. So thanks, everyone, and we will see you next month.